We are at the World Economic Forum in Davos and in conversation now with Manish Kejriwal, the managing partner and founder at Kedaara Capital. For the uninitiated, Kedaara is an India-focused private equity GP with USD $3.5 billion of AUM. Manish, great talking to you. Thank you for speaking to us.
It's a pleasure, Neeraj.
Yeah.
Pleasure to be back in Davos, even though it's warmer than normal, and I don't need my gloves anymore. So
well,
go ahead.
You are a strange beast because we are freezing out here, I must say. So, Manish, tell us about how do you feel about the mood in Davos? I mean, global economy kind of going through a turmoil, India relatively better, but is the India chatter the loudest that you've seen, and will that stay that way despite a Western slowdown?
You know, I think, well, about India first, India is a secular story. So whether you call it China plus one or Europe plus one, this is India's decade ahead of us. There's no question. But I don't think people are focused only on India, right? Because there are far more global issues which are far more critical. And I think the two or three areas that most discussion that I've been on, there was a very good small McKinsey dinner yesterday, a bunch of other private meetings. And the mood has been a lot about the global, the G2G issues, whether it's Ukraine and Russia, whether it's China and the US, whether it's China and Russia. Is it bipolar? Is it multipolar? What happens to Sweden and Finland? Are they going to join NATO? What's going to happen to Taiwan? So there's a lot of G2G, and that's really, I think, the basis of the discussion. Economically, I think, listen, the Europe's in a difficult situation. We all know that. This mild winter, actually, maybe global warming is doing one good thing. You're having a mild winter, so the price of oil and its derivative products are actually somewhat reasonable. So it could have been a worse summer financially for much of Europe. It hasn't been, because the winter has been mild as we're seeing. I've never seen so little snow in Davos, and we've been here for 15 plus years. As far as the economics are concerned, I think the sense I'm getting is definitely what I would say in our world, risk off. So people are holding back, they're stepping back. You've seen it happen. If you look at last year, the first half and the second half of 2022 was a complete contrast.
Yep.
People were deploying capital like it was crazy in the first half and the end of 21. The second half of 22 has been much more that's the environment we like.
Mm-hmm.
We finally feel valued. Public markets are finally getting to some degree of comfort. Is it overvalued? I still think it's overvalued. But if you look at it globally, G2G, main issue. India, of course, doing a lot better for the first time across Asia, relevance. And of course, then a lot of discussion on technology. Whether it's the global supply chains. We were in a session this morning. We had Sunil Mittal along with the CEOs of IBM, Accenture, and Qualcomm, just talking about the chip shortages, the value chains, just how interdependent we've all become. So, there was Anish Mahendra just talking about how there were 50,000 to 150,000 orders for his cars on the first 3 hours when they launched the new XUV. But they could only supply 5,000 in a month. So the world is interlocated, and no matter how you say it's India, actually, I still believe for a strong India, it's good to have a strong economical China. I think we need the chips, we need the supply chains intertwined. So I would say, despite being a proud Indian, unlike what you're hearing a lot, I would like a financially strong China. Most importantly, for our supply chains not to be whacked out of proportion.
Wow, that's a different statement. All right. The interesting bit that I got also was that a few CEOs that we spoke to said that China plus one is actually a thing of the past. It now seems to be China for China, and India plus nearshoring for the rest of the world companies as well. Do you sense that in conversations?
I think that's been happening for a while.
Huh?
I think the difference is I just came here from a nice warm session. You've been here all afternoon.
Yeah.
I saw you interviewing Adar earlier. But I'm saying, in reality, to that question, the issue actually is the inverse. India was actually ignored for many years, and for multiple reasons, right? There's one story which says we tend to, when things are going well, as they were between 03 and 08, that's the last time we had so many India pavilions. We know what happened in the financial crisis, not just in the US, but even in India. I think we're doing it a lot more smarter now. And I think more importantly, when I see our own portfolio companies, the change that has happened is not only investors or FPI coming into India, but many of the global strategics, whether it's a large packaging company, whether it's FMCG companies, whether it's financial services companies, India is no longer ignorable. So in boardrooms all across the country, the question being asked is, what is our India strategy? So historically, for example, from a sourcing perspective, there was one company we talked to, they had operations in Malaysia and in China. The risk mitigation or whatever the case might be, they're now setting up a plant in India. They were looking for an acquisition in India. That to me is real demand. So I think that and then given what happened in China the last couple of years, in a sense, we are taking advantage and we shouldn't be shy of doing it, but they need an alternative. And being a democracy, being a relatively free market, it's probably more, people are realizing how attractive. And there are two sources. One is as a source of production, factory production, whether it's IT services, whether it's pharmaceuticals. I mean, Adar, you're with, he produces, I don't know what, 40% of the global vaccines in the world. That's amazing.
Yeah.
But I also see India as a demand source, so as a market in itself. And that is what historically was being ignored. We saw India as a source for IT services, Y2K services historically, but then guys like Infosys have changed them. So even smaller IT services companies are doing phenomenal work, not just cheap low-end service, product development. The stuff coming out of India is phenomenal. But India as a market too no longer can be ignored, right? So that was the history. And two areas especially that we've done a lot of work, financial services and consumer goods, FMCG goods, consumer goods, and now consumer tech. It is phenomenal. And I think underlying all that, Neeraj, what has always got me very excited about India, whether it was my Temasek days, the McKinsey days, or now my Kedaara days, which I hope will be going for a long time, is the quality of our entrepreneurs, the quality of the management teams. Today, I've started now spending every Sunday with a CEO that I really enjoy spending time with, if he has the time. And I say Sunday because then there's no, next meeting another half an hour. And I really think the quality of our talent, I could go on giving names. I was sitting with one for lunch just now, with a couple of others yesterday evening. And that's reflected in our global companies. You see IBM headed by Arvind Krishna, Google, Microsoft. This is global, and these are people who've come in from IITs and IIMs. So I just think the strength was always there. We're now unleashing it both as a market for consumption and people from abroad are coming in here. You can see that in the automotive. We are now the third largest automotive market after China and the US. I think we've exceeded Japan as a number of units of vehicles sold, maybe not by value, but at least by number of units. And I see that happening. It's just natural. So I think this is a decade whose India is a country whose decade it should be in the next 10 years.
The belief is that it could be a B2B decade. Manufacturing would come to the fore. I heard you speak about finance, services, tech, consumers, not manufacturing till now.
It's because we haven't done a lot of stuff manufacturing, but that's not an omission by any standards. Maybe it was an oversight. And I do think if I see, for example, what the Tatas are doing, the big difference is the large conglomerates are coming back, right? So if I see what Tata is doing in terms of iPhones or consumer durables, whether it's iPhones, whether it's, and people getting into fab manufacturing, I think that's a stretch, but I think that's finally happening. So I think what the government has done, from demonetization, from upending many of the laws, the GST stuff where it's now favorable and you're competing with people head on, you don't have inefficiencies like tax emission or electricity non-payment. I think manufacturing was always there from a management perspective. You now have the infrastructure in place in terms of government policies and PLI and stuff like that, where I think, and if we don't have manufacturing, we're going to create unemployment. We need manufacturing to succeed. So I don't think we have an option as a country, but listen, the government guys are much better dressed to address that than guys like us.
Sure. My final question, and that's around areas or pockets where you believe you would want to pick up the first amongst equals, because I presume that the choices have only widened.
No, I think that's right. But I think, as I said earlier, to me, those things in the demand side, which are proxies. Remember when we came back to India from studying abroad, and not that far away, 20, 25 years ago, there was nothing called a mortgage product. You had to buy, in full check when you buy a house. Today, the market is massive, but it's still massively underpenetrated. So I still believe, for me, financial services, whether it's lending, NBFCs, banks, whether it's asset management, where the market is still evolving, but the level of penetration is still lower, whether it's insurance, both life and general insurance, the market is huge. And we are coming up using fintech and technology with ways to address the market, both from a credit evaluation perspective. I see what my colleagues at Bajaj FinServ and Finance are doing. It's mind-boggling. I think it's sort of leading the edge globally, right?
Sure.
And so that's on the financial services. Then I see consumer durable, just consumer goods, and then consumer tech companies like Lenskart, like Purple and Nika, taking certain verticals, addressing it so strongly, being able to deliver the same product in a much cheaper way to the end customer. So that is, you keep talking about the bottom of the pit. India, despite having the lowest per capita, our manufacturing and our products can be priced at a much more competitive level. So that's one, which is around India as a market. The second is India as a source of factors of supply. So, especially IT services, a well-known story.
Sure.
But if you look at pharma, I mean, yes, there have been challenges in the FDA in some of the regulations. But more broadly, I think if you look at the Indian pharmaceutical industry more broadly, its time has come. I mean, it's not classically pharmaceutical, it's vaccines, which are different. But still, if he can make a company like Serum Institute, which really stands out in the world, I think that's just the tip of the iceberg, of a very good iceberg, not a negative iceberg.
Most certainly. Manish, pleasure talking to you. Thank you so much for speaking to us. And look forward to having you more often on the platform.
Absolutely. Thank you so much, Neeraj. Good to be here.
That's a media show. Manish Kejriwal talking to us at Davos at the WEF. Thank you so much for tuning in.